everybody. My name is Felicia Perry. I am the Executive Director of the West Broadway Business and Area Coalition. We are a nonprofit located in North Minneapolis. We are a business association comprised of business owners, entrepreneurs, residents of primarily of North Minneapolis, and those are the folks that we serve. We put on area-wide events such as the Flow Northside Arts Crawl, Black Friday on Broadway, Open Streets, West Broadway, and several other pop-ups and retail opportunities that we try to provide for our entrepreneurs and businesses here on the corridor. Our goal is to create a vibrant and thriving West Broadway corridor with the effects that will spread Northside-wide across the business community. So every month we have our Northside Business Luncheon. We, for the last year and a half, 2 years, we've co-hosted them with Neon, Northside Economic Opportunity Network, also located on West Broadway. And what we like to do is bring together our business community, including experts, different folks around community and the state really who can help provide expertise, knowledge, information. It's also been a really great space where we can all connect and network with each other. So you come to a luncheon, you might make a business deal. You also might learn something really amazing to help sustain your business. So we invite everybody to join us every single month. We've been recording these since the stay-at-home order and also recording them virtually versus being in person. So after this recorded event, we will be publishing it to our Northside Business Luncheon YouTube channel. So make sure you subscribe to that. And if you want any more information about the luncheon, please visit West Broadway, www.westbroadway.org. And you can also visit Neon's website at www.neonmn.com, if I'm not mistaken, but we will get the correct one before the end of today. All right, so if you, I just want to let everybody know that this is being recorded if you're joining us in Zoom. So if you don't want to be seen, go ahead and turn off your video, but we would love to see your faces. If you are streaming or watching us live streamed on Facebook, make sure that you utilize the comments there. We have staff that'll be watching the comments and responding, and also bringing your questions into the conversation where we open it up for audience or participant questions. And the other thing I encourage you all to do is drop your business card in the chat. Now, normally when we're in person, we hand out business cards, we chat with our neighbor. If you're like me, you're probably chatting the whole time as well as taking in information. We want you to utilize the chat for that. If there's a question, if you see one of your folks out there joining and watching with you, reach out to them in the chat and make sure you keep that alive as it always has been. Okay, so without further ado, I'm going to hand this over to WBC's program manager, Brian McLaurin, and he will tell you all what else to expect from today. Thanks, everybody.
Thank you, Felicia. And as Felicia pointed out, my name is Brian McLaurin. I am the new program manager at WBC. I'm excited for several reasons. I'm excited to, one, be back in the community I love and affecting the lives of those who I've walked hand in hand with. But I'm also excited about today's call because we have two wonderful panelists today. I'm excited, one, because I know of their work, the work that they've done in the community that precedes them. Our first panelist is Wendy Hines. Wendy Hines is the owner and managing member of Beatrice, David & Associates, LLC, a bookkeeping and tax preparation service. This company was founded in 1986 and provides tax preparation, record keeping, startup assistance, and consulting for individuals and businesses. Wendy Hines has had a diverse career in accounting and financial work that spans domestic and international audit in Fortune 500 settings, nonprofit, controllership, small business development and support services, as well as charter school management. She provided business plan development and training services in excess of 15 years with Neighborhood Development Center sites in North and South Minneapolis, including Whittier CDC, Northside Residents Redevelopment Council, Northside Economic Opportunity Network locations. She is also an active part of the nonprofit and charter school communities of Minneapolis. She's a founding board member of 2 high-performing charter schools. He has also served as treasurer of several nonprofits. Her educational and professional credentials includes a BS in accounting from Southern University, HBCU, go ahead, and CPA certification from her native state of Louisiana. Wendy, would you raise your hand so everyone knows who you are out there? Hello, Wendy, nice to have you.
Thank you.
Our other panelist for today is also, she's a native of the Twin Cities. Her name is Anisha Murphy. Anisha Murphy is the Director of Community Advancement with the Community Reinvestment Fund USA. In her capacity, she leads strategic partnerships, development, and works with community stakeholders to create a more fair, responsive, and accessible community finance system in the Twin Cities. These efforts will create new strategies that build stronger local economies, create jobs, and support upward economic mobility in neighborhoods and transition corridors in the Minneapolis-St. Paul metro area. Additionally, Anisha is the owner of Just Law LLC, a small business law firm providing entrepreneurs, businesses, and nonprofit organizations with innovative, creative, and accessible legal tools needed to support sustainable and equitable business development and growth. Anisha is an adjunct professor at Hamline University and Mitchell Hamline Law School, where she teaches numerous courses. Additionally, Anisha is a current legal fellow at the Sustainable Economic Legal Center located in Oakland, California, and is finishing her master's degree in business administration at Capella University as a Capella Fellow. Sense of duty and impact drives Murphy in her career. Her ultimate desire is to have impact and close the disparity gaps, eliminate the racial wealth divide, and ultimately disrupt systemic and institutional barriers that result in unequal access to opportunities for Black and Brown communities. In her free time, Anisha enjoys hanging out with family and friends. Anisha, would you wave your hand, please? Welcome, welcome. I'm excited to have you both. We have a lot of information to get to today, so I'm going to jump right in. Just so you know, the 2 areas we're going to be covering today is centered around tax preparation. One is bookkeeping and the other deals with PPP. We have a goal in mind for selecting these topics because we believe they're very pertinent, one, for this time of year, but also for the season that we're in as a society. And so we kind of wanted to go back to some of these fundamental things that are important to businesses in our community. We'll first be starting with Wendy. Wendy, as it pertains to bookkeeping, what type of prep work can businesses and entrepreneurs still expect to complete for the 2020 tax filing?
Well, Brian, thank you for the opportunity. You know, we've had a roller coaster of a year in 2020. Since 2018, there have been probably 5 tax bills or bills that affected taxation, and the most recent one being December 27th. So this year, the tax season start is actually even pushed to February 12th, whereas people are accustomed to it happening at the end of January. There are lots of changes, and the better prepared your bookkeeping is, then the more opportunities you can take advantage of when you have your tax preparation done. Probably the most important thing that people can do is prepare. Communication between the taxpayer and the preparer is essential. And if you don't know about the things that are the most basic, you can't really communicate them and expect a really good outcome. So there are many things that can be done that have to do with getting your books and records in order. And I could talk probably ad nauseum about how actually to put together a bookkeeping system. What we find with a lot of startup businesses is they're kind of shoebox people. We really want the shoebox to go away. And why do we want to get rid of the shoebox? Because when you wait until April to show up with a box full of receipts, there's a couple things that are really clear. The first is that you have no idea how your business has operated during the year. You're missing essential information to actually run your business.
Mm.
And then there are other things that, opportunities that you're missing out. Anisha's going to talk to us about PPP. One of the requirements is you be able to compare 2019 revenues to 2020 revenues by quarter. If you haven't done your bookkeeping, or you do it so that it's everything in one bucket at the end of the year, you can't even answer that question. Nevertheless, be ready to get the funds that are out there for you. I think everybody should have a basic accounting system. And those systems, if you're not going to do the work, you need to hire someone to do it for you. But it is an absolute must.
Well, you kind of alluded to this, so I kind of want you to expand on it.
Yeah.
How do you develop a record keeping system for your business?
Well, first thing and the most basic, your business should have a business bank account that is separate from your personal stuff. If you're audited, you don't want them looking at your grits and groceries. If they're talking specifically about your business, you want to be able to produce business records. So I would say that is maybe the first step. It's very easy to set up a system that's either manual or automated. I don't really suggest the manual systems anymore, because if you lose the notebook, then you've lost the records for the year. Whereas if it's automated, most likely you have it backed up somewhere in the cloud that you can get at it. I suggest people set up something. QuickBooks is a widely known, fairly simple program that people can use to do their bookkeeping. And it will allow you to enter your income, your expenses, track your inventory if you have any, and your property purchases. So if you do that, it also will allow you to download from your bank account, so you don't have to spend as much time doing data entry as you once did. That was kind of the put off for a lot of people. You should match your receipts to your bank every month, and then you can have your folder by month with your receipts, so that if you need to prove an expense, you know where the receipt is. Okay, it's not in the garbage bag in the back of the truck seat. Okay. You're laughing, but I've had contractors who did that. They literally kept a bag behind the seat in their truck. And at the end of the year, they brought that bag of paper to someone to summarize. You need to track your business mileage. Business mileage, you keep a log. The law requires that it be written down. Some people use an app, and that's a great way to do it. Right now, that's 56 cents per mile. So every 2 miles that you're driving for business is a write-off, but people lose that write-off because they get to the end of the year and they have no clue. They just haven't kept the records as they've gone. You need to pay for your business expenses through your business account. Either use your debit card or write checks, however you do it. You want to keep your information in one place so you can find it. Deposit all your business proceeds into that same account, and you need to keep records that identify the sources of the deposit. People will come in and they've deposited lots of money and they say, well, my business wasn't doing so well and I had to put money in. Well, someone else who's looking at your records can't tell the difference between customer money that you deposited and your own money that you deposited. You have to have records so that you don't end up paying taxes on money that you put in. Or then when you get ready to pull money out, you can't prove that you loaned money to your business. So you should have documentation. If you make a loan to your business, you actually should create a loan, a note that shows your intention, that you're not putting it in for capital, but that it actually is a loan to the business. Your system should be able to identify who you owe and who owes you. So that's your receivables as you've made the sale and you're doing your invoicing. And then at the end of the period, who didn't pay you, And then also the same with your unpaid bills. So if you pay people to work for you, you need to have several things. One of them, if they're an employee, you need an I-9 and a W-4. The I-9 is the immigration form that says that people have a right to work in the US. The W-4 is the one that shows how many exemptions and how you pay them or what their withholding is. You should also, as a side note, have workers' comp if you have employees and pay into unemployment. I know those hurt, but you need to. We actually suggest that people have a payroll service if you have employees so that those things are taken care of. Because if you're not going to do them, you as a business owner need to make sure that those things get done. And then if you have a subcontractor, you should have a W-9 showing their name, address, tax ID number, and you also should have a contract because you need to prove if you're challenged that they actually were independent. So I know that may sound like a lot, but you have responsibilities. You have to issue W-2s and 1099s, and those are due the 31st of January. And if you don't have the information, I'm sure people are not operating like back in the days when I got started, when people would show up the day before the deadline and said, hey, I paid all these people and they're my employees, but I never filed any returns all year. So now I need you to go back and estimate what my returns should have been so I can get them all filed and I can create W-2s. We don't do that anymore, right? So the last thing I'm going to say about the bookkeeping is you also need a list of all the property and equipment that you buy, and you should keep the invoices. That's something your accountant or your tax preparer would love to have, because quite often you can write off all of the property or equipment that you bought, and they don't know it because you haven't necessarily told them. One example, years ago when the deduction first came around that you could buy an SUV for your business and write it off and maybe not pay taxes that year, there were a lot of people who were really happy about that. But if you never told your tax preparer that your business bought a vehicle, you didn't get the write-off. So Brian, I told you I can talk about this ad nauseum because I've lived it a long time.
I know. I'm just overwhelmed listening.
I love our small business community and I want to see people thrive and do well. You need your records. You honestly need your records, and they're not as difficult to create as it may all seem. And if you need help, just, there are a lot of us accountants, bookkeeping type people out here in the community who can help.
Yeah, you draw a lot of comparisons between, operating as an individual taxpayer and as a business owner. I think that brings up another question. What are the types of taxes that business owners should be aware of?
Okay, well, businesses pay a number of different taxes. First of all, you pay your federal and state income tax. If you are in business and your business is earning profits, and you're not paying in to your federal and state taxes as an individual, or sometimes if you have a C corporation, it has to pay its own, you have to make what's called estimated tax payments during the year so that you don't get to the next tax season and owe the government. Those estimated taxes are due April, June, September, and January. You're supposed to pay in upfront a quarter of what you're going to owe for the year. So you've got the income taxes. There's also, of course, there's sales taxes that you're collecting and paying to the state. Sales taxes, we don't pay them on items that are going to be resold, but then when we sell something that's taxable, we have to collect and pay the tax. There are use taxes. If you go to Iowa and buy that piece of equipment, because the sales tax in Iowa is cheaper than it is in Minnesota, and you think you've just got a deal, guess what? If the state of Minnesota finds out, they're going to ask you for those taxes for the difference that you saved. So there are use tax reports. Payroll taxes, of course, we're paying on the wages of the employees that we've hired. And there are also excise taxes. Some people who drive over the road trucks, for example, have to pay a heavy highway tax. There are property taxes, and then there are other miscellaneous like local taxes. One lady who had a restaurant on West Broadway actually went to jail overnight one time because she didn't pay a tax, and she didn't believe it was it was something that had to do with the smokestack. Okay, so I just want you to know that there are a lot of different taxes, but the ones that cause the most problems for small businesses are sales taxes, payroll taxes, and even the business income taxes. If you don't pay the payroll taxes in your business, those taxes can be assessed to you as the owner, and then you have a legal obligation that is very difficult to get rid of.
Okay. You know, the title of our topic is prepping for tax. So yeah. I guess I kind of want you to can you expound on like any additional information that'd be necessary, in terms to prepare for taxes, like in terms of setting up your business. Is there any additional information that they should be aware of that they will need when that time comes?
Okay, so in terms of setting up the business itself, you actually can save on taxes by the form of entity that you choose. And we have wonderful Anisha. I'm so pleased to meet you. I can't wait to hear your presentation, who could tell you probably even more about what forms of entity you should be considering for your business. But once your business is established, then the basic bookkeeping is the important aspect. It is how you communicate to lenders and to anyone who wants to know the results of your business. So in getting ready for the tax season this year, I would suggest that people work with an organizer. And an organizer is just a document that lists what kinds of write-offs and what kinds of things that should be considered at tax prep. I actually have sent one that would be, I think, with the notes or the chats after this. It's a very thorough document. Many people don't like them. In fact, we stopped sending them to our customers years ago because people would bring them back blank at tax time and say, you sent me this and I don't want to do all of this. That's why I hired you. But the problem with that is then I have to either sit in an interview and ask you all the same questions when you may not have the documents with you, or we're going to probably miss something. So I would advise that you take a tax organizer and that you work through it and you pull together all of the pieces that are in that organizer to support. If the things don't apply to you, well, good, just say that. But it at least makes you think about the things that you could use so that you're able to get the deductions that you're entitled to.
A couple more questions, and we'll segue into the topic of PPP. But one thing, and this is kind of off the cuff, but you got me to think about it. A lot of times we don't understand that our business in itself has an identity, and there are certain statements and financial records that are produced. Can you go more into detail into like things like income and expense statements? Just those basic things that give lenders an idea of what your profitability is as a business and things like that.
Sure. The balance sheet is the document that shows where your business is at one point in time. It shows everything you own and everything that business owes and the difference, which we call equity. And equity is really what we're after when we have a business. It says that the business is profitable, that it is progressing. So But that balance sheet says that as of today, I've got this much cash. These many people owe me money, and I think it's collectible. It shows who I owe, not the individuals, because it's a summary document, but it shows the amount that I owe in terms of loans or payables, and then the equity is the difference. The other document, the income statement, shows a period of time. It shows how much money did I earn and what expenses I had against that. And then the difference is how much profit I've had for the year. Those are the documents that are the starting point, both for your tax return, and they're the documents that any lender is going to want to see. So if you have a good system in place, you should be producing these documents monthly to quarterly at a minimum. And then if someone needs them, it doesn't take you 6 months to produce a document that the lender needed yesterday.
I'm going to close our segment out with you with one more question. I'm going to make it kind of personal.
Uh-oh.
So
Okay.
I'm kind of that mom and pop business owner, and all I know how to do is cook. That's all I've ever done.
Oh.
So I'm coming to you, and I want you to convince me why keeping good records is important to the sustaining my business.
Okay, so you say cook, and now you have to remember, I used to sit and have 5 people come in a week and say they wanted to start a restaurant, and I felt like my job was to convince them not to. So I said, so we start with that. One of the most basic things about the business that you're starting is how much to charge for the meals that you're preparing.
Mm-hmm.
If you do not understand your cost, you do not know whether or not you're actually paying people to eat your food.
Wow.
Okay, many people go out and they price their stuff based on what someone else is charging.
Mm-hmm.
They're not considering how much it physically actually costs them to get the product and the labor involved in bringing the product to a point where it can be sold. And then the other cost, the overhead. You got to have insurance if you have anything that goes into a human body, right? So the insurance, the cost of all the running around, the people that help you put it together, the supplies and materials, the packaging. So if you don't understand, if you don't have a good bookkeeping system, you may be underpricing your product, and you may be living by what's in your bank account rather than how much money you actually are making or losing. And you may not be aware that you're losing money until all of a sudden that bank account doesn't look so good.
Wow.
Okay, so it's just real. It honestly is real. It is so important to have a bookkeeping system that I just cannot tell you enough about how important it is.
Well, you sold me before I even asked the question, but it was just kind of thank you so much. You know, I'm sure we're gonna have many other questions for you, but I told you earlier when we were on the call, I know you're a walking database, so so I learned so much already just in the few minutes we've already shared. So I thank you again for sharing all of that information. That was the practical side. Now let's move into more of the applicable side with PPP. That's the Paycheck Protection Program. And we have our community expert on PPP in the form of Miss Anisha Murphy. Anisha, so good to have you, and I'm so glad to meet you. Let's just dive right into PPP. How does the Paycheck Protection Program work?
So well, first of all, thank you, Brian. It's so good to be here, and thank you, Wendy, for all of that helpful tax tips that you just dropped on us. I am also a small business owner, so I'm like, yeah, I need to get my books in order. So that was great. So the Paycheck Protection Program, it protects the paycheck, right? The use of funds, 60%, I should say, of the use of the loan should be spent on payroll related matters. So that's employee payroll costs, it's group health insurance payments, it's dental and vision plans, disability benefits, life insurance, and owner's compensation costs. And then the remaining 40 could or should be used for utilities, rent, interest on mortgage payments. It can be used for business software, cloud services that facilitates business operations, costs related to property damage, vandalism, or looting due to the civil unrest that occurred in 2020, supplier costs that are essential to the operations of the business, and then PPE equipment, so personal protection equipment that helps businesses comply with federal and state COVID-19 safety guides, and then measures that help businesses comply with federal and state COVID safety guides. So that's a long way to say Paycheck Protection Program protects the paycheck. And it's a supplement to help protect income that may have been lost due to the COVID-19 pandemic. To that extent, I think maybe I should just keep going because there are two different types of programs. So it's not a new program, I should say. It's actually a continuation of the first program that wrapped back in 2020. So there is a first draw PPP loans, and then there's a second draw PPP loans. So on the first draw, it's for individuals who did not receive a PPP loan the first round back in 2020, and it who qualifies for this program under the first draw are employees or employers with fewer than 500 full-time, part-time, or seasonal employees. And they were in operation prior to February 15th of 2020 and remains in operation. And the loan, how the loan amount is traditionally calculated is that the loan amount is 2.5 times the average monthly payroll expenses. And we can talk about how you calculate that a little later. But the maximum loan amount would be $10 million. So that's first draw PPP. So if you did not qualify for some reason, or you just didn't, take advantage of it, so many individuals last year were just skeptic of what PPP would be. You heard a lot of false narrative of this is free money, this is free money. While that is true, it's still a loan in nature. It's a forgivable loan, and you have to do and uphold to the requirements that is set out by the federal government in order for that loan to be forgiven. So that's the first draw. And then the second draw PPP loans are for individuals, businesses that received a PPP loan in 2020 that employs fewer than 300 full-time, part-time, or seasonal employees can demonstrate a 25% reduction in revenue in any quarter of 2021 when compared to that same quarter in 2019. And the loan amount is calculated, it's three times the average monthly payroll for food, services, and accommodation industries. So we all know that the restaurant tourism industry was hit really hard. So they're allowing 3.5, times the average monthly payroll amount. And then those who are not in that NICS code, like a nonprofit who qualify for the first round, for example, and you're going now for a second draw, it would be that 2.5 times the average monthly amount. And with the second draw, the maximum loan amount is less. It's the maximum loan amount only covers $2 million.
Wow. I felt like I asked you like 5 questions. You gave me too much information. So here's another question. What type of businesses and entities are eligible for the PPP loan?
Literally any type at this point. So nonprofit organizations, for-profit businesses, so LLCs, S Corps, C Corps, solopreneurs. So many solopreneurs may qualify as an LLC, and they would qualify as well. Certain nonprofit organizations qualify. I know in this round versus the last round, churches will actually qualify versus the last round last year. Churches wasn't able to qualify. I think the biggest thing with PPP is that eligibility and determining eligibility really is determined by the lender. And
Oh,
so what we're seeing this round is so many big banks are not providing PPP loans, and CDFIs like CRF and META and others are, and our eligibility requirements are really set out and determined based off of what us as a lender would require.
you spoke you spoke about getting the loan forgiven. Um, how can people go about getting their PPP loans forgiven?
So you have to ultimately apply for a forgiveness, and you do this through the SBA. So you'll once you get a loan, you'll get the loan forgiven and apply for forgiveness through your lender who you qualified with the loan through. I mean, you'll fill out a forgiveness documentation, and the lender, it's up to the lender to actually forgive the loan, not the SBA.
Mm.
And so your lender verifies that the use of proceeds were used for payroll expenses or payroll related matters that I outlined above earlier. Um, and that's how forgiveness usually happens. It's a simpler process for borrowers with less than that has a PPP loan of 150,000 or less. And eligibility for forgiveness has been expanded for PPP loans that have not been forgiven and for second draw PPP loans. And then again, to be eligible for forgiveness, funds just have to be used for the laid out covered periods that we discussed earlier.
Okay. So I've heard of PPP loans, but I've also heard of PPP grants. Can you discuss kind of what the primary difference is?
That there's no such thing as a PPP grant.
It
It's
isn't.
a no. I think what you're thinking about is the EIDL grant. So there's EIDL. I can't think of economic injury relief. It was another program through the SBA,
Oh,
and that was actually in advance. So that was a $10,000 advance that acted as a forgivable loan based on the requirements, but it was not a grant. PPP is a loan program. EIDL is a loan program. I can say the only truly pure grant programs would have been through like Hennepin County had a grant program, Ramsey County had a grant program, City of Minneapolis had a grant program, but there's no PPP. These programs are loans, and they are forgivable in nature if you follow the forgiveness standards, but it's not automatically forgiven. And that is something that is really important to get out there, that message. So many people are like, oh, this is free money, this is free money. I look on social media and they're like, qualify for free money, and that's not 100% true.
I am so glad you made that distinction. So let's get down to the nitty gritty of this. How do a business go about applying for a PPP loan?
So again, the eligibility and how to apply will vary based on your lender that you are actually applying through. So Sunrise Bank is totally different process, and what they're going to require is totally different than US Bank. And US Bank is totally different than what we require at CRF. So the first thing is to understand what your lender is requiring and follow those steps that they're requiring. And a lot of people in the first round, and I should say the first or second round last year, were jumping between lenders, and it made it very confusing for that borrower because one lender may require more documentation than another lender, right? And so my thing is, if I were you, I would just my advice would be just to stick with one lender and get over what that lender will need versus jumping around. To that extent, for CRF, our documentation that we require for PPP loans, I just had to pull it up, but it's Company or corporate information. So that includes legal name, legal structure, your tax identification number, address, and data formation. We require personal information for the authorized signer or the officer authorized on behalf of the business. So that's the name, home address, email, and then the driver's license, both front and back. Most lenders, this is across the board, but especially CRF, we require the articles of incorporation. Organizational structure, your bylaws and operating agreements, your business license, if applicable. We require both business, state and federal tax returns from 2019 and 20, if 20 had been prepared, and then also individual taxes for both state and federal for 2019 and 20, if 20 is applicable. And then a trailing 12 months of revenue and expense statement. So like Miss Wendy just talked about, having that information readily available, having a profit and loss statement, being able to understand and know what the last 12 months that you've done in the business from a financial perspective is really important, because we as a lender require all of our borrowers to submit some sort of profit and loss statement with your application. And then the most important thing is your tax information, or your tax journals or payroll reports from 2019 and 2020. And qualifying forms that we use to verify is either a 12-month payroll journal, 2019 and 20 Form 90, tax forms 941. So that's your employer quarterly federal tax returns, or your 2019 and 2020 Form 940. So that's the employer's annual federal unemployment tax returns, or the 2019 W-3. And these are for employees that run payroll. And if you're a solopreneur and you're applying, we just require the Schedule C to be submitted.
Okay. So final question, then we'll get into our question and answer period. Will they be taxed on the PP loan or the expenses paid with the PP loan?
That's such a good question. So I was reading the regs, and the regs change daily. Like literally, the regs are probably changing right now as we're talking. To my understanding, Congress made it clear back in December 2020 that a forgiven PPP loan is completely tax exempt and is not taxable income. I'm not sure if it's a non-forgiven PPP loan. That I think Miss Wendy would be a better question for Miss Wendy to answer. Go ahead.
The PPP loan would be forgiven, would be non-taxable on the federal level, and it would come into income normally, because even though the loan was forgiven, the expenses, you weren't able to write off the expenses. But Congress changed that in December. So federally, you don't pay any taxes on the PPP loan, right? But the state of Minnesota is not in compliance with the federal government. So if you got that nice little $10,000 PPP loan and it was forgiven in 20, then you're going to have to include it in 20 income for Minnesota. So some of the other grants that people received, those grants are taxable in the sense that the expenses that you paid with them are not deductible. So this is, like I said, it's a roller coaster of a year. You really have to put a little time and thought into your records and into your tax return. This is not the year to just, whatever the tax preparer gives you, to just kind of accept it. You need to understand a little more in your conversations up front and when you get the actual returns back.
And I will say to that point, it's always best practice to keep a separate ledger and all your business expenses, but especially how the PPP proceeds have been used. If you can keep a ledger and show this is what the money went to. I paid payroll for 3 months, or I paid this utility bill with the 40% that I was able to pay. It'll help you, one, from tax purposes, but also for forgiveness purposes once you apply for forgiveness.
Wow, that's a lot of information from both of you. I can't thank you enough. What we want to do at this time, we do want to open it up for a few questions from our audience. I'm not sure if anyone, I think I saw a question earlier.
Yeah, there was actually a couple questions, both pertaining to receipts. One was from Kathleen from Minnesota Mama Innovation. She wanted to know, Wendy, she is currently using a software that takes photos of paper receipts. So she's wondering if it's necessary to still hold on to the paper receipts, even though she's got that electronic copy. And then just to follow up with that, there was another question just asking what type of receipt system you use or you suggest that small business owners use.
As long as she can produce an electronic copy and it is a facsimile of the receipt, she should be fine for tax purposes. I do suggest that you have a system. It does not matter whether you're keeping the paper receipts. We know the paper receipts fade over time. So actually an electronic version will preserve what was on the receipt. But I suggest people just keep them in folders by month if you keep the paper receipts, and that those are tied back to your bank statement so you can prove that this was where you paid for whatever item. Just having a copy of a check or a money order, those don't prove anything. They don't prove that you actually paid a business expense. Okay. I can't hear you.
You
think you're
unmute.
Muted. I'm sorry.
Yeah.
There was also another question from Facebook, and it just said, hopefully someone can cover paying taxes when you've got a registered assumed name, but you're doing business as a sole proprietor. How separate should your income and expenses be from personal accounts? Which I know you touched on that a little bit before, but just to kind of follow up between that separation.
Even though you're a proprietor, you still should treat your business as though it is separate from you. You should have a separate business bank account, and you should be running all of the income and expenses for your business through that account. If you mix them up, then when it comes time for tax preparation, you've got to go through every time you went to McDonald's, okay, and that actually becomes a problem. Also, you open yourself up if you're audited. The auditor then is going to have to look at everything that you did personally in addition to what was just for your business.
Can I add to that? Because it was itching me, and I wrote Felicia in the comments privately, but legally. So I'm going to turn on a different hat. As Brian said, I own a small business law firm called Just Law LLC. Shout out to my mentor who's on this call, Davis, who also owns Davis Means Business, another law firm working with small business owners throughout the Twin Cities. But legally, as a business, a registered business, you have a legal obligation not to commingle funds. And so you have a fiduciary duty, duty of loyalty, duty of care, not to commingle funds. So if you're operating as a business, always keep business expenses separate from personal expenses, because not only are you opening yourself up to audits, but you're also opening yourself up to breach of your fiduciary duties by commingling the two. So that's what I will say. Just best practice is to keep them separate, and your business expenses flow out of your business account and your personal expenses flow out of your personal account.
And then there was just a question about clarification on expenses paid for with the grants are not deductible on taxes.
That is true, because either the grant is not taxed. So the PPP loan, when it is forgiven, just like any other debt, if it was like any other debt, if you had a credit card, for example, that you settled out with and some portion of that was forgiven, you have to include it in income on your tax return. But the Congress, because of the times we're in, has said for this particular one that you don't have to include it. Well, the IRS rules say if you don't include the income, you don't include the expenses that go with the income.
Mhm.
So that is the case. So for PPP, for federal purposes, it's taken care of. But if you got grants from other sources, then you still have to either not report the expenses or add the income. Okay.
Wow. Well, I'm blown away. Not that I expected any less from the two of you. I can't begin to thank both of you enough for making yourselves available. I'm sure you're going to be getting many phone calls, many follow-ups as this video begins to circulate. Again, thank you so much for being a part of our luncheon today. And can we give them a real quick hand, real quick? All right. At this time, we're going to turn it back over to Felicia for final remarks. Again, we want to thank all of you who were part of this call, and we look forward to future calls and signing off. Turn it over to you, Felicia.
Thank you so much, Brian. And thank you, Anisha. Thank you, Wendy. Thank you, Teresa and Carla, also in the background, holding it down. I want to also thank everybody who's been watching on the Facebook Live and for also offering up your questions. If you still have questions, if you want deeper explanation, if you want to book folks for their services, make sure you sign up for the WBC newsletter. We will, after this, be sharing with you the resources. Wendy has a few resources, documents and PDFs for you all to help you in your journey. We'll also be sending out the information on our panelists, as well as any additional follow-up questions and answers to those. And if you have not already, subscribe to the Northside Business Luncheon YouTube channel. All right, did I miss anything else, Teresa? I didn't, okay, cool. All right, thanks everybody for joining us.